We are now looking at silver. The large spec index is a black line. Remember, we know as the specs come into the marketplace, these large traders start to drive prices up. When they come out, prices come down. When they come back in, prices rally, etc. This is interesting because this is done through the week ending June 1st, 2007. We don't know what the large traders are doing in the future, but we have a really good idea from the large trader proxy index. I'm using 65 days here. That tends to be a pretty good time period for silver, unlike hogs or cotton, cocoa, coffee, some of the shorter term markets where the commercials have a different purpose and a different time frame. Okay, underneath that, so we have the large trader proxy index, that's in blue. I placed in orange or gold here a moving average. In Genesis it's 44.3, which that means we're using a type of moving average. We're using a 4-day moving average, that's this gold line, but I'm going to extend it 3 days in the future, that's .3. And that allows for the market to swing up and down in here and not getting whipsawed a lot. So we know during this time frame, the large traders are long the market, they're short the market, they start to buy, the market rallies, they start to sell, it declines, in here they become bullish, and in here they become bearish, and they just became bullish June 1st, 2007. Though we don't know the future, but we have a pretty good idea that that's how these guys work, that we can use the large trader proxy index to get a good sense of what these guys are doing in the marketplace. And silver certainly isn't the only market. You can see another example of it. I'm opening up the time frame a little bit more here, how closely this parallels what the large traders are doing. We'll take one more look at another market, but the main thing to remember is when the large traders are long, you don't want to be selling the market irrespective of the commercial large position. This tells us the buying power is to the upside, and you want to be taking all little buy signals you can in this time frame because the market is strong. The large traders, the fuel of the marketplace, are in control, and you want to be buying dips, breakouts, whatever, because the market has a lot of buying interest in it by large traders. They're driving the marketplace. They're the trend, and you do want to be with the trend. Our next chart of the large trader proxy index looks at a currency. For the most part, currencies are based on 90-day time frame. I think this is because most companies, international companies that are hedging their product versus the currency they're selling or buying in, go out about 90 days. So I have a 90-day large trader index, same of course 443 moving average, and as you can see, once the blue line gets below the orange or gold line, the market goes into a downtrend. The large traders are sellers. Once we get above, they start to be buyers in the marketplace, and over here they start to become sellers in the marketplace, and lo and behold, down come prices. Interestingly enough, you can look at this in the future. Week ending 5/31/2007, they're dead even. And in fact, they just crossed on this Friday, June 1st, 2007. They've just crossed, suggesting that the large traders have come back into the market and on the long side. It's a really good trend indicator. Say, oh, trends change. Now, once that happens, as you see in this time zone, I'll blow that up. We want to be taking buy signals in this area because the large traders are with the trend of the marketplace. And again, make certain you combine or use the correct time frame of the market that you're trading. In this case, about 90 days tend to work pretty well. If we, in the currencies, if we go into a shorter term market, say hogs, cattle, it's a different time frame. You want to use a different time frame of your indicators. You can play with that a little bit. The big thing I think I would suggest is a moving average method at 443. Stay with that. That seems to work the best to tell us when the trend shows that the large traders are in the marketplace. They are the driving force of the market. Just keep that in mind. And now it's really cool because we can go in on a daily basis and see if the large traders are buyers or sellers in the marketplace, and we can act accordingly. Well, that's it, the proxy index. I think you're going to love it. It will give you a whole new insight into the marketplace and make certain that you are trading with the larger momentum of the marketplace, with the fuel of the marketplace, with the large traders. Combining that with the picture perfect pattern and what the commercials are doing really gets us about as close as we possibly can to a lead pipe cinch trade. Okay, that's it. You've learned about large traders. Let's move on to the next lesson.